Beyond Meat jumped this past week on earnings, and it wasn't just earnings. Primarily, it was the short sellers that had to recover their shorts. Now, this is the daily chart, and we'll have to make some adjustments as price has breached, not necessarily closed above, but breached the weekly sellers level and this support resistance level at roughly, say, $10.50. It was a great shorting opportunity as price came back to test that support resistance band. In addition, you had the 200-day moving average serving as, like, say, a stop loss. So I'm going to take this off the chart. However, I'm going to leave this support resistance band. Now you see support down here at the $6 level, and that was a nice double bottom, which is one of the reversal patterns doing when you do chart analysis. And it hit this target here. Scroll up to the weekly chart. This is a nice level of, depending on how you draw your zone, weekly sellers, which coincides nicely with support, which is why price hit it and then finished roughly $3 lower. Here's that double bottom I was referring to in the daily chart. Now, before we continue with the analysis, let's actually look at the results. So short sellers are down nearly 74 million in paper losses according to data from S3 Partners LLC. The growing value of positions against Beyond Meat also puts traders at risk of a short squeeze phenomenon where short sellers are forced to buy back the stock to unload their losing positions. The short covering drives the company's share price higher, adding further pressure to contrary traders. So this is a phenomenon that we're seeing right now. Now, Beyond Meat shares are on track to reach their highest level since December, putting the stock in positive territory year to date after 3 consecutive years of losses. The stock jumps comes after the plant-based protein company's fourth quarter earnings report, which showed better than expected sales and touted a path to profitability this year. There was nothing encouraging in the Beyond Meat quarter, said Howard Penny, managing director of Hedge Eye Risk Management. He reiterated that the firm has a short recommendation on shares and sees very little future for the company. Wall Street analysts seem to agree. Beyond Meat has no buy ratings, 7 hold, and 9 sells, according to data compiled by Bloomberg. The average price target of $7.33 implies about a 31% downside from where shares currently trade. So, as you can see, this was a great opportunity to short from the technical standpoint, and from the fundamental standpoint. Yes, short sellers are getting squeezed, but Wall Street believes that there's no future growth in the company. And kind of looking at the monthly chart, they mentioned 3 down consecutive years, and boy, you can see where Beyond Meat came from. You know, it was trading above $200 at some point, and look at this beautiful, kind of like on the bottom, we saw the double bottom. On the macro level, we see a double top, which is a huge sell opportunity. So yes, price did spike, but I wouldn't get too happy. Look for price to fill that gap at $7.50 by summertime. Thanks for watching. Subscribe. Please like the video.